Hey guys, and welcome back to another video here on the channel. If it's your first time here, my name is Brandon. As always, we do offer courses and training through our Investing Academy. If you're a beginner, you can click the link down below to learn about that. But in today's video, we got a really interesting video today. We got two topics to discuss. We're gonna start off by talking about the market, and I'll just share with you some of my thoughts, some things that have been kind of troubling me with what I've been seeing online. I'm just gonna kind of give you some of my insights there, and we're gonna finish this video off with a stock pick. So we're throwing in a one stock to buy today, and we're gonna be going for a bit of a higher risk stock, type of stock that we don't normally cover, but I think it's a really fun, fascinating one. And I had actually planned for two separate videos, but I figure, hey, let's mishmash them up and kind of just go for more of a discussion. I really hope you guys enjoy this kind of quick video. If you do want to skip ahead just to the stock pick, you surely can do that. I'll put something up on the screen here, but we will start today's video off with the stock market, the general markets. And if we pop up on the screen a picture of the Dow, we know what a crazy little bounce back this has been. In fact, the S&P 500, if we take a look, I believe is down currently just shy of 2%. So despite everything that's going on in our world, we're essentially flat on a year-to-date basis. And this is, of course, the US market. When we talk about the S&P 500, the TSX, which is the Toronto Stock Exchange, this one is still down 7%. But if you do take a look off of these March lows, we've seen a recovery of over 40%, which is just one heck of a recovery. Very fast. And if you would have asked me, a month ago or 2 months ago, if this is what I would have expected, I can't say this would have been my first guess. At the time, it seemed like all we were hearing about was coronavirus and lockdowns and unemployment, a very negative sentiment. And I'm pretty sure I heard some super investors saying things like this is going to be worse than the Great Depression. This goes back a couple months now. Very panicky time. Of course, what a lot of people are putting their finger on as to why we've seen this recovery, why we've bounced back in the market here, is the stimulus. We've had a lot of money. We've had the Fed step in, the government's come in and just pour money into the economy as kind of a last little ditch result here to keep us going and keep the confidence high. I do think that it's fair to say that as of right now, there's a bit of a disconnect between the stock market and the economy. And I mean, we look at it today as I'm filming this video, we have the protests and the riots. A lot of companies are still not operational, or at least just getting back into it. Yet we have companies pushing at new all-time highs. It just doesn't make a whole bunch of sense. And hey, that's the market for you sometimes. But during a time like now, I know a question that we're going to get is, am I buying stocks? I have added here and there. Let's say in the recent week, I added one stock which we covered in the previous video, which happened to be Raytheon, which is an American stock. But in general, am I doing a lot of buying after this run up? I definitely don't feel too comfortable putting a whole bunch of money into the market right now. Things do definitely seem to feel inflated, a little bit artificial. And I've always had this feeling in my gut that we are not quite out of the woods yet. And I know we have two camps of investors. In fact, there was a poll we did, or somebody did actually, in our group over on Facebook, which I thought was a fantastic poll, just saying, hey, what are you guys doing the next week? Are you holding off? Or are you buying or selling? And there was a very even split amongst those who were holding off and kind of just feeling out the market, a little bit uncertain. And then another camp of people who are just buying and just excited to put more money in and ride up this rally. And I know for a fact, for a couple of reasons, that a lot of these people that are doing buying right now and are very excited to put money in the market are new investors. And we take, for example, one of the reports that came out recently with Robinhood. They released data on a record number, a huge spike in new brokerage accounts being opened. This is obviously one of the trading accounts in the US. Here in Canada, we've seen Wealthsimple Trade. The amount of questions I've got on Wealthsimple Trade and Quest Trade, and new investors here that are taking this downtime or taking the government money that they, maybe got a little bit more money or a little bit more time on your hands, taking that to learn the stock market, which I think is fantastic. Don't get me wrong. I think that's, if you're going to do anything with your time, you could waste a couple hours on, Netflix or whatever you want, or you can learn about investing. I think that's awesome, and I congratulate everybody who is new and getting started. But at the same time, I feel like I'm seeing a little bit of recklessness amongst the online community. And I don't want to come out here and sound like a Grinch or a mean guy or anything. I'm just saying, as a YouTuber, you do see a lot of trends in the comment section and the sentiment. And I'm really starting to see a lot of people, I mean, I'll pop up on the screen. These are a couple things that I actually clipped the other day. Just some posts online. Deciding to open up a Wealthsimple trade account 3 months ago was the best decision that I've made in a long time. As a 21-year-old, I can say without a doubt that this market crash was a once-in-a-lifetime opportunity. I could say without a doubt that this market crash was a once-in-a-lifetime opportunity, and I'm thankful I decided to get in on it with 160 upvotes. And a reply to that one was, same. My only regret is that I wish I invested even more. Opening up my account and started investing for the first time ever in March when things got started, and I'm up 25%. And these are just two of hundreds of clips and posts and comments that I've seen in a very similar fashion, which is really giving me an unsettling feeling. And again, I mean, no disrespect to anybody that's in this camp. I was actually really troubled on my last video when I talked about Canadian Tire. And I got a ton of comments with people who bought the stock upon the release of that video. And they were like, yo, Brady, you killed it. Like, you nailed it, man. Like, awesome pick. And as much as that feels great, and I do respect anybody who left those comments and thank you for the support. There's two things that are very, very unsettling about that. First things first is that none of you should just be copying picks blindly off YouTube because somebody made a post about it. The whole point of these stocks to buy videos is to give you ideas to throw on your watch list, to research more. I know for a fact people that were making these comments were blindly following the videos and just buying without even doing any further research themselves. That's not the point of those videos, and that's the troubling part number one. But the second part, despite the feedback being positive, there is no way that you should be judging a pick like Canadian Tire or any stock for that matter on this channel over a 1 week period. It's been a week or 2 weeks since I posted that video, and you guys are going to come back, again, not trying to be mean and no disrespect, but you're going to come back and leave a comment saying you killed it with that pick. If you're viewing investing like that, you are doing it so wrong. And I think this all ties back to the new beginners, not the new beginners, the new people or the beginners that are just getting into it, who are super excited and they're just getting into investing and they like to call themselves investors, but the way they're acting is far more like a trader. The fact that Canadian Tire stock is up, I don't even know how much percent it's up, but the fact that it's up like a nice amount, that has nothing to do with my pick. That has nothing to do with the research I did. That has nothing to do with my video. That has nothing to do with that. The markets in general had a very nice bounce back. We saw that when we touched on it in the beginning of this video. The markets in general have been up. Now, if the markets instead would have dropped 15% or 20% over this 2 week period, would the same people that leave those comments come here and say, Brennan, you're so stupid. You made a terrible pick with Canadian Tire? Maybe some people would. The point being here is that has nothing to do with the pick itself. It's just the market that has done well. And for a lot of new investors, I'm losing my train of thought here, but that's something that it did kind of trouble me. I appreciate the support, but no one should be judging an investment decision over that short of a time frame. If you want to come back 5 years from now, if you want to come back 10 years from now and leave a comment on my video as to whether I made a good pick or not, that I can respect. Because that is a realistic time frame where we should be judging these decisions, not a 2 week period. And again, to tie this all together, where I'm trying to get at here is that vibe, that sentiment. I think investors that are thinking that way are going to learn a very, very harsh lesson over the next little while. The market, at least from my experience, it seems to always find a way that once you think you figured something out, it finds a way to just flip it all over and just end up just right in your face. Things just don't work out the way that you plan for them to do. And I saw people on Reddit, I saw some videos on YouTube talking about how Warren Buffett is a fool for selling out of the airline stocks because he missed a recovery of, 50% or whatever they ran up in the recent month or so. How silly is that for a new investor who's been doing this for a couple of weeks or a couple of months to question the great legendary Warren Buffett? It boggles my mind that somebody that new would have the nerve, the courage to go out and leave a comment. Like, hopefully I'll pop some on the screen that I can find here. Just thinking that they can outsmart Warren Buffett, one of the greatest investors of all time, for someone that's just brand new. And it's just, I know I'm going on a bit of a rant here, which is probably not what you guys are looking for, but it was just kind of troubling. If you're an investor for the long term and you truly are an investor, it shouldn't matter what happens this week or next month. It really, really shouldn't. And these people that are leaving comments are coming at it with a very, very short-sighted mindset when they're claiming to be these long-term investors. And I think if you find yourself in this camp, it'd be good to kind of assess where you stand and just kind of reflect on it, because it's a very common mistake for beginners to get sucked in to being over-involved. And, you hear of any investor who has done this for some time. When they got started, they got sucked into the whole trading thing. Every single person's done it, and they learn over time that that's not what to do. And you hear about that, but for everybody that's getting started, this to me seems like what they're doing. And you see the hype for the Air Canada, the Carnival Cruise Lines. It's just, it's a little bit troubling is what it is. And in times like this where I've seen the sentiment from the viewers, it's usually a good sign of what to expect going forward. And if everybody's super excited that the market's going to keep running up, if I had to put a guess on it, I think that we're not out of the woods yet. I think that a lot of these people will learn a really harsh lesson going forward. Don't know if that's going to be the case, but that would be my guess. And I think really as a lesson that we can kind of just reflect on, and as we always like to say, is rather than trying to time this market and saying when would have been the best time to buy, or should I be buying now? If you would have just been constantly buying as the market went down, you'd be winning right now. And one of the worst things you could have done is to have sold out and panic sold. And if you did, well, take it as a lesson. Hopefully not too expensive of a lesson if you're a beginner. But times like this happen all the time. This is not a once in a lifetime opportunity. I guess I wish I had more to tell you about the market, and I wish I knew what was going to happen. But it's just, those are some of my thoughts right now. Some of the things I'm feeling. And am I personally doing any buying right now? I'm going to be holding off for now, just a little bit, kind of see how things play out. And hey, it's a weird market that we're in this current day. But moving on to our next part of the video, I did promise that we're going to be going over a stock to buy. And we got a fun stock in store. This is definitely what I would consider more of a high risk stock. So a smaller market cap. If this is your first stock that you're looking into for your portfolio, I'd probably look elsewhere. I'd probably look towards more of the stable, more quality companies. Let's call them more quote unquote the boring companies that you can find. And we've done a bunch of those on the channel. If you want to look up the banks or, the Bell Canadas or the CNRs, et cetera, et cetera. The stock that we're going to be covering today is the company Aritzia, ticker ATZ.TO. And this, for any of our female viewers or anybody who is, I guess, more in touch with the younger generation, I believe it's a younger generation type of thing, this is a massive, massive clothing company. And you've seen them in the malls. They do what they like to call everyday luxury. So it's not your super expensive high-end clothing, but it's also not your, H&M or your Gap clothing, whatever. It's actually quite nice. I know for a fact because I have a girlfriend, and a large chunk of her wardrobe does come from Aritzia. And I think that's fair to say for a lot of the people around our age. This is a company that did recently just IPO. So if we look at the history, we don't have a whole bunch to look back at least as a publicly traded company. It was actually founded in 1984. This is a company out of Vancouver, so my hometown here. And we do see a market cap of $2.3 billion. So again, quite small in the big scheme of things. And if you aren't familiar with this company, they essentially have their own lineup of brands. So they've got kind of their in-house brands. Babaton is one, Wilfred is one, number of names that I'm not too familiar with personally, but they do also sometimes carry some branded stuff. So you'll see from time to time some Nike in there, some other kind of designer jeans. They absolutely will take on other companies' products, which is kind of cool. They're based originally here in Canada. They have actually about 95 locations, I believe it is. Majority Canada, but they are expanding into the US. And I think as of today, they have about 27 or 28 locations into the US. They're actually undergoing a big expansion there. And, prior to the whole COVID situation, I'll explain at the end of this video why I consider this a higher risk stock. Prior to the whole COVID situation, this company was actually performing quite well for a retailer. And if we look at their year-over-year numbers, this is their revenue growth. So sales, a compound annual growth rate of 17%. This is dating back to when they were private, but a very healthy trend here. Very nice growth path. And what's awesome about that is in the recent years, they've done a very good job of keeping pace with their net income. So they're actually making some good money on the bottom line here. We see $95 million in fiscal year 2020. And like all companies, it's still unknown. I feel like we're saying this for every company, but you kind of have to right now. It's still unknown as to how much this coronavirus is going to impact these companies long term. And really, when we get the next quarter numbers, which will include the full grunt of the lockdowns and the slowing of the business, that'll give us a clearer picture. But the reality is there is a serious threat for companies like this, companies of this sort, especially in the retail sector, that they may not make it through. They may go bankrupt. That's an actual thing. And we're starting to see a couple here and there. But that's, of course, the risk you take when you want to go for a higher growth company. You could go for a boring old company that you know is going to make it through this whole mess, and maybe they'll reward you X amount. Or you can go for something a little bit higher up the risk scale and expect a higher return. And with a stock like Aritzia, I feel like it could be one that's worth taking that gamble on if you do it responsibly, because the stores have been closed, but the company has done a fantastic job of selling products online even during a lockdown like this. And I'll tell you, in my apartment building, when you look downstairs at the concierge, you see packages for Aritzia. I've been seeing them over the past 2 months. There's been no stop in demand for this type of thing. And I mean, the numbers have shown that itself. During the shutdown, they saw year-over-year growth of 150% in their online sales, their e-commerce sales. And girls these days, they do just as good of a job shopping online than they do in stores. And you can feel free to argue with me on that, but I think I can speak from experience. That is absolutely true. And one thing about Aritzia is they have done a phenomenal job with their e-commerce platform. They've done so well with rolling that out and developing that out that I feel that really is going to set them aside from a lot of your traditional boring old retailers. The online sales will keep them afloat. And not only that, I mean, that's just one angle of things. The business itself, they do a fantastic job of connecting with their market audience. The way that they market, the way that they brand using influencers and trendsetters, it is just, they're always one step ahead of the curve. And it's something that I actually saw. I got the comparison to Lululemon. There was a post somewhere online saying, is Aritzia the next Lululemon? And Lululemon is a stock that I at first I still don't necessarily believe in. I've never been a huge fan of it because they're so niche, because they're so, one-dimensional, and it was just not really a company for me. The whole retail thing was not my style. But I've clearly been wrong with that. And the share price has done quite well. They've done a very good job. This is also a Vancouver-based company, FYI. They really nailed down their market and what they do, and the stock and the company's doing well. Aritzia, to me, could very well be following in that path because I really do think that they have a knack for staying ahead of the curve and not necessarily falling out of fashion. I mean, this company has been around for quite some time and it's just grown in popularity. And I think with everything online, with the way our society is kind of headed, with the YouTube hauls and the influencers, like I mentioned, and just everything out there, especially with this presence going into the US, I think there could be some really, really good potential for this company. And it is definitely a stock that would come at a higher risk because of everything that we're going through right now. But again, with the online sales, I really feel that they're going to be able to make it through this. Again, it's tough to say. This is kind of one of those speculations you have to make, but the numbers do look promising. I think it could definitely be a fun one to look into. It does not pay a dividend as a new company that is recently to the market, and it does trade for about $21. It's of course had a pretty nice run up with the broader market. We actually bought some stock for my girlfriend as the stock was going down, so we got a nice price on it there. But hey, it could definitely be a fun one to monitor. And I know a lot of people say like, oh, the stocks in Canada are all so boring. We're sick about hearing the banks. We're sick about hearing about, the utility companies and the energy companies. And it's quite true. You don't get too many exciting ones here. So I figured I'd try to throw this one in just to kind of give you guys something light and fun to look into if you feel it's one that's appropriate for you. And I want to make that very clear after everything I said in the first part of this video, talking about the stock picks and whatnot. You always need to do your own research, always do your own due diligence in a time like this, and always be in it for the long term. That's really the overriding idea behind investing, at least if you follow our approach on it. If you guys enjoyed today's video and my thoughts, you can feel free to give this one a thumbs up. I'd love to hear your comments down below, whether you agree with me, whether you disagree with anything that I said in today's video, or the Aritzia stock pick. Do you own Aritzia by chance? You can leave a comment down below if you do. I'd be very curious to see. As always, as mentioned at the top of this video, if you are a beginner to the stock market here in Canada and you do want some course, you do want some training on getting started, we are taking complete beginners, people who don't know anything, through that entire process. We make it super simple, super easy language, and we have a very digestible course that you can go through, and we'll guide you along the way. We have a group you get to ask questions in, but that's what we call our Investing Academy. You can learn more about that down below. But I hope you guys enjoyed. I hope everyone's staying safe at a time like this, and I'll see you in the next video.